Hello, good evening, viewers. Now I am going to discuss about share-based payments, which is governed by Indian Accounting Standard 102. Now, basically, I am addressing to the final level students who will be appearing in Group 4 in June 2020 examination. And remember, so for the point of view of examination is concerned, questions are often coming from this chapter, that is share-based payments. Now let us start. The accounting for ESOP is dealt by Indian Accounting Standard 102 share-based payment. Employee share-based payments generally involve grant of shares or stock options to the employees at a concessional price or a future cash payment based on the increase in the price of the shares from a specified level. Such payments are known with a variety of names. ESOP is a measure to strike a chord with the good employees, permanent employees, and whole-time directors by offering them with company's equity shares or stock option, and at the same time making them to stay with the company for some more years by providing them the right to exercise the share subscription in the future. Nowadays, ESOPs are widely used as tools for creating wealth of employees, as also motivating them to continue working for the company. This also helps cash crunched company by warding off the immediate payment of bonus other benefits. In any case, these payments nowadays constitute an important part of the overall remuneration package of the employees in various industries. The basic objective of such payment is to compensate employees for their services and or to provide an incentive to the employees for remaining in the employment of the enterprise and for improving their performance. In this scenario, the issue of recognition and measurement of services received under an employee share-based payment plan assumes great significance. Now the question comes, why the scheme of ESOP? Firstly, attracting and retaining the best employees. Secondly, increase performance, trust, and sense of ownership among employees. Thirdly, companies on high growth trajectory can introduce this scheme to let key employees continue their stay. And fourthly, the companies with shortage of cash can simply adopt ESOP model. Some employers use share-based payments as a part of remuneration package for their employees. Such payments generally take the forms of employee stock option plans, ESOPs, employee stock purchase plans, ESPP, and stock appreciation rights, ESOP, are plans which an enterprise grants option for a specified period to its employees to purchase its shares at a fixed or determinable price. ESPP are plans under which the enterprise grants rights to its employees to purchase its shares at a stated price at the time of public issue or otherwise. Now, in order to understand the concept of share-based payments, we are required to understand certain terminology which are actually being used. The first terminology is grant. Grant means issue of options to employees under ESOP. Number two, exercise. It is the act of an application being made by the employee to the company to have the options vested in him issued as shares upon payment of the exercise price. Exercise can take place as specified after vesting. Exercise period, the period from the date of vesting of option till the date the options can be exercised. On the expiry of the exercise period, any options that have not been exercised will lapse and cease to be valid for any purpose. Now I am coming to exercise price, the amount to be paid by an amount to be paid to an employee at the time of exercise of his option. This price is determined at the time of grant and remains constant over the term of the option. Exercise price determined earlier, during, or within the exercise period, subject to the requirements of vesting. Market price. Market price of a share on a given date means the closing price of the shares on that date on the stock exchange on which the shares of the company are listed. Now coming to the terminology of option. Option means a stock option granted pursuant to the plan comprising of a right but not an obligation granted to an employee under the plan to apply for and be allotted shares of the company. Vesting means the process by which the employee gains full rights to the options granted to him in pursuance of ESOP. Vesting period, the period during which the vesting of the option granted to the employee in pursuance of ESOP takes place. Next comes amortization, an accounting procedure that gradually reduces the cost or value of an asset through periodic charges against income. Next comes vesting period is the period that an employee needs to wait or keep working in the company. In between the vesting period, employee doesn't get any shares. If he dies or leaves company, he won't get any shares either. Now we are coming to exercise period. Exercise period is the period when employee can exercise the plan, but he has to pay the exercise amount. Otherwise, the employee shall not be allowed to participate until the company again allows the employee to exercise the plan. At allotment, if the market price of share is high enough, then it is worth waiting. Otherwise, it is not that worth waiting. Now, ESOP from the point of view of taxation for an employee. At the time of receiving ESOP, benefits arising from ESOP is taxed as perquisites in the hands of employee. And the calculation is made as under fair market value on date of exercise minus exercise price. Employer is required to deduct TDS in respect of such perquisite. At the time of sale of shares, it is treated as capital gain and the calculation is made as sale price minus fair market value at the rate at the exercise date. There will be, if there is a long-term capital gain, it will be taxed at the rate 20%, and if there is a short-term capital gain, it will be taxed at the rate 15%. LTCG through recognized stock exchange not taxed, but STCG taxed at the rate 15%. Now we are coming to ESOP from the view of accounting perspective. Now I'm just taking an example. ABC Company Limited has its share capital divided into equity shares of rupees 10 each. On 1st January 2020, it granted 20,000 employee stock option at rupees 50 per share when the market price was rupees 120 per share. The options were to be exercised between 15th March 2021 and 31st March 2021. The employees exercised their options for 16,000 shares only and the remaining options lapsed. The company closes its books on 31st March every year. Then with these parameters, we are going to pass the following journal entries. Now, these journal entries are to be recorded on 31st March 2021. Employee compensation account will be debited, that is rupees 14 lakhs. This is calculated on the basis of 20,000 shares multiplied by difference between the market price and the employee stock option price, that is 50. So it comes to 70 rupees multiplied by 1 year divided by 1, and credit will be given to employee stock option account also 14 lakhs, that is being employee stock option recorded. Now again I am just repeating the journal entry: employee compensation account debit 14 lakhs to employee stock option account 14 lakhs. The narration is being employee stock option recorded. The formula that I have applied: number of options still available multiplied by market price minus stock option price into expired period divided by vesting period minus expenses recognized in the previous year. Now, next journal entry is profit and loss account debit 14 lakhs, that is 20,000 into rupees 70 to employees compensation account 14 lakhs being amount written off. Then bank account debit 8 lakhs, that is 16,000 into rupees 50 to employee stock option account 8 lakhs being amount received. Then employee stock option account debit, it is 19 lakh 20,000, that is 16,000 into 120 to equity share capital account, that is 16,000 into rupees 10, that is 1 lakh 60,000 to equity share to securities premium account, that is 16,000 into 110, that is 17 lakh 60,000 being shares allotted. And the last entry is employee stock option account debit 2,80,000, that is 4,000 into 70 to journalism account, that is 2,80,000 being ESOP cancelled. That is all about. So for the employee stock option plan and the share based payments are concerned, hope you have understood. Stay well, stay fit, stay at home, don't go out, and study on a regular basis. Thank you. Thank you very much.